How much do you think Tesla stock will be by 2030? Tesla undoubtedly experienced one of the toughest years it ever had last year with the market volatility in Elon Musk's Twitter acquisition. Today, Tesla seems to be going down a smooth road again. That said, how much will Tesla stock be by the end of the decade? This year, Tesla shares have rebounded and have joined the global stock rally. It soared to a high of $217.65 in mid-May, which was much higher than the year-to-date low of $100. The rally gathered momentum after the company published what most analysts believed were strong profitability numbers for 2022. After repeated rejections from the $208 resistance, Tesla's stock price had a major pullback. In April 2023, the price tagged a low of $152 and has been in the midst of a recovery since then. In fact, Tesla stock is currently sitting at $221.31 per share. So how much do experts think Tesla stock would be by 2030? In a CNBC Squawk Box episode, head of Barron Capital Ron Barron said that he thinks Tesla stock could hit $1,500 by 2030. During the session, Barron said he wasn't concerned about volatility in the market, especially with current levels of consumer demand for Tesla's vehicles. Barron considers Tesla's current demand to be at historically high levels. Barron further stated that he expects the company's stock price to keep going up in the years to come. Tesla makes up about 30% of the BP-TIX portfolio, making it Barron's largest holding. Demand picks up so much, it's unprecedented demand for his cars right now. Barron said, "We started investing in this company in 2014, and they were doing 31,000 cars a year. He thinks 20 million cars by 2030. I'm thinking $1,500 a share by 2030. Notably, Barron's mutual fund has remained one of the greatest benefactors of Tesla's exponential growth in the past several years. With a total of $5.7 billion in managed assets, the Barron Partners Fund has seen a 5-year return of about 26.5% on Tesla stock on an annualized basis, and a 10-year return of 20.9%. According to Morningstar, these figures make the fund the best-performing U.S. equity fund over the long-term period. I'm not really worried about the stock market," Barron added. "I don't worry about the market, I don't worry about the economy." As for his confidence in Tesla, Barron noted that Tesla has been called the safest car ever built in the world, and he expects the automaker to put out a lower-cost model, which he says will make the company worth 7 to 10 times more down the road. Barron is undeniably bullish on Elon Musk's companies in general. Even last year, when the stock market exhibited extreme volatility, Barron disclosed that one of his largest purchases of the year included roughly $100 million in private investments with SpaceX, and around $200 million going toward a specific satellite. Although there's no way to know what will happen to Tesla share prices in the weeks and years to come, it's hard to deny that Barron has had some things right in the past. As for whether Tesla's stock trading price could hit $1,500 by 2030, no one knows for sure yet, but an affordable, mass-market EV may be a crucial element of that journey in the years to come. Meanwhile, ARK Invest CEO Cathie Wood believes that the stock will be over $3,000 by 2030. In fact, Wood thinks Tesla stock could hit at least $2,000 by 2027, representing one of the most important investment opportunities of our lifetimes. Wood expects Tesla's full self-driving FSD beta to someday support a fleet of robo-taxis, noting that the autonomy business would be a key driver of her $2,000 expected value estimate on the stock. This represents a $500 increase from Wood's previous target of $1,500 by 2026, predicted last June. In the recent note, Wood and ARK Invest predicted that Tesla's robo-taxis could bring in as much as $8 to $10 trillion in revenue by 2030. Tesla has remained one of ARK's largest holdings for the flagship ARK Innovation ETF ARKK, with a total 9.4% weighting. Along with ARK's expected value of $2,000 per share, Wood also shared a bull case price target of $2,500, as well as a bear case price target of $1,400. The firm predicts that Tesla's robotaxi business will contribute 67% of its expected enterprise value and 64% of its expected EBITDA in 2027. Additionally, it expects Tesla's EVs will contribute 47% of revenues in the same year, albeit at substantially lower margins than robotaxi revenue. With Tesla's current and future generations of vehicles all having FSD capabilities, the company is effectively scaling the potential for robotaxis with each car it sells. Even as the system develops and improves through increased FSD beta testers, the company will be deploying a large vehicle fleet someday capable of autonomy. It's this prediction that makes Wood and ARK so bullish on Tesla and the potential for a robo-taxi business, a possibility CEO Elon Musk first mentioned in 2016. Wood also emphasized the need for Tesla to scale autonomy in recent statements about a potential robo-taxi business. "We want Tesla to scale its unit," Wood said. "Each one of them now presents a potential for a robo-taxi and robo-taxi fleet. We think that it's very smart to maximize units." However, there are those who believe that Tesla stock is overvalued and may see more downside in the coming months. According to recent Tesla news, Elon Musk warned the shareholders about the deteriorating global economy. According to Musk, Tesla is not immune to a weakness in the global economy. He also told the shareholders that he was not stepping down as the CEO. Recently, the popular rating agency Moody's has upgraded the Tesla bonds to investor-grade status. A few months earlier, S&P also upgraded the credit rating of Tesla from BB+ to BBB. This shows that Tesla stock is on its way to becoming a blue chip, as it is currently the global leader in the manufacturing of electric vehicles. Tesla, considerably the biggest EV maker, is ramping up its Gigafactory Texas and Gigafactory Berlin. This has resulted in a massive increase in production and deliveries. The company delivered 405,000 vehicles in Q4 2022. Due to the increase in production and the surge in demand, Tesla Inc. is on track for another strong performance in Q1 2023. The most important Tesla news was the company's fourth quarter and full-year results. In its statement, the company said its Q4 revenue rose to $21.45 billion, which was higher than the $13.75 billion. Its profit jumped to $1.19 per share, which was higher than the median analyst estimates of $1.13. Most of these numbers, as expected, were from its automotive business, which made over $21.3 billion. However, due to a series of price cuts across different markets, the Q1 financials of Tesla weren't that impressive. Even though the company met most of the analyst expectations, the net income of Tesla still fell by 24% from last year. This has resulted in a sell-off in Tesla's stock price, which is now trading close to its 3-month lows. In fact, in its efforts to boost sales, Tesla has already slashed car prices multiple times in 2023. Although the price cuts vary depending on the region, on average, Model S and Model X prices have been lowered by a few $1,000s. In March 2023, the company announced a 5.2% and 4.3% discount on Model S all-wheel drive and Plaid models respectively. Further, Tesla has also cut prices in China for the second time. It slashed the price of Model 3 by 13.5% to 229,900 yuan, while Model Y dropped by 10% to 259,900 yuan. Still, data from China Merchants Bank showed that 106,915 new Tesla vehicles were registered by mid-March. This puts the company on track to have a record number of sales in China after setting a record just in its last quarter. Tesla stock is up 11% after the news, as investors expect a strong quarter. What's more, the recent price cuts by Tesla in different regions have also resulted in similar measures from its competitors. Its top Chinese competitor, BYD, also recently announced price cuts in the second biggest economy. Overall, Tesla is a highly divisive company. On the one hand, there are Tesla bulls like Cathie Wood who believe the company will do well and thrive in the future. On the other side, there are analysts and investors like Scott Kilmer and Bill Miller who believe that the promised future of EVs is only a mirage. He believes that there will be no mass demand for the company. For now, it's impossible to say with any certainty what may happen to Tesla's stock. However, with autonomy development quickly gaining traction in the auto industry, it's not long before it enters the market more significantly. And Cathie Wood certainly thinks it's a worthwhile market to get a jump on. Subscribe for more.